Welcome back to the GTS Masterclass. So far, we have done the mindset, we have gone through all of this. So now starts the meaty part, the ones that you are actually here for. So we'll start with the foundations and we will look at how we will learn about the market structure from basic to advanced. We will also learn about zones. So let's get started. Right off the bat, let's go to the charts. So I I'm going to tell you first things first how the markets move. So there are basically just two ways the markets are moving. The first one is trending, right? The first one is trending. We are making higher highs and higher lows. We are just going high. The second one is obviously like the ranging. So the trending market is we are making higher highs and higher lows, or we are making lower lows and lower highs, like we are in a downtrend or we are in an up. The second one is obviously the range bound market, in which we are just stuck in a range. We have a some sort of a resistance, and we also have some sort of support, and the market is just going up and down within a certain range. So this is basically how the markets move. The glitch is about how to trade the trending markets. And once I get into the later stages of this masterclass, we will also have a range play masterclass as well, which I actually use when the market is ranging. But all in all, this is basically how the markets move. It's either trending or it's just ranging. So, going next, this is generally how the markets look like. So we have this sort of structure. We have a higher high and a higher low. And once we change structure, we have some sort of retracement, or we can call it lower lows and lower highs. So I know you guys, someone's are beginners and someone are advanced, but bear with me. I have to take all of you guys with me. So we'll start from scratch. We'll start from the basics itself. And first things first, we will learn some terminologies. So this is some sort of a starting low, right? It's a starting point for us. We make a high. Actually, let me do this. So we make a high and then we retrace back. So this is called a retracement, when we are going high. So this is called the impulse leg. We call it the impulse wave, impulse swing, impulse leg, whatever you want to call it. And once we start pulling back, this is called retracement. It's pretty simple. So we have a starting point, we make a high, then we retrace, and then we make a higher high, then we retrace back. So this becomes a higher low with respect to this. And then we make a higher high, breaking the previous high over here. And then we make a higher high, and then we retrace back, making what? A higher low over here with respect to this. And then the structure continues until a point comes that we start making lower lows. This is where the trend shifts. Now I'm going to annotate all of this, and we will look at it together and see how does this all make sense. So first things first, we need to know what a higher high and what a higher low is. We have this low, we have this high, right? So from low to high, we have an impulse leg. We call this a swing high. Why the swing? Swing is basically whatever time frame that you are looking at. The highest high, the highest point will be called the swing high of that leg. It could be 4 hours. So if you're looking at 4-hour time frame, the highest point on the 4-hour time frame would be your swing high. And once we start retracing, we have this high over here, and once we start retracing, we post a swing low, a higher swing low relative to this low. So this becomes a higher swing low. And then we break the structure. So this is a second terminology that you need to know, which is called a break of structure. I will call this boss. So this becomes a break of structure. Why? Because we broke the previous swing high and we posted a higher high. We closed above the previous swing high on this particular time frame, which is 4 hour in our case. So this is all the 4 hour structure. So we made a higher high relative to this previous swing high. So we have a higher swing high. And once we start breaking above this, once we start breaking above the previous swing high, only then we will call it a confirmed swing low, not before. Until the structure breaks and we post a higher high, this low is not validated. It's only validated once we break above the structure. So we go ahead and we post a higher high. It's a higher swing high for us. And then we again start retracing. We come back into somewhere over here and we post some sort of a low. And then the price starts going back up. It starts going back up. It starts going back up until it breaks the structure again. It breaks the previous swing high, which was the higher high relative to this. So this was the previous swing high. We broke it. We closed the body above it. And now our previous higher low relative to this, right? This is validated. It's a confirmed higher low. Why? Because from this low came a higher high. Similarly, over here, from this low came a higher high. So this was our swing low. It was our higher low. It was our higher low. It was our higher low. Why? Because higher highs came from these lows. So this would be our swing low. This would be our swing high. This would be our swing low. This would be our swing high. And we keep doing that. We keep breaking structure to this point. Now, you will notice once we start breaking structure upside, we are obviously in an uptrend, right? But there comes a point when this protected low, which was the higher low in our example, which obviously brought a higher high, this is the protected low. So if the trend needs to be intact, this particular low, only this low needs to be defended. It should not be violated. A body closure should not come below this level for us to resume higher highs, for us to resume the trend. So once we get a body closure below this level, we call it a market structure shift. Some call it change of character, CHOCH. I call it market structure shift because it's easier to say. The MSS. So now I label it at MSS. What is MSS? MSS is basically once we create a higher high and we have a confirmed low, a protected low, and if the price comes down, breaks the protected low, then we call it a market structure shift. This is an indication that the previous bullish trend is likely to start reversing now. A retracement is coming, a pullback is coming. So that is why the market structure shift is very, very important for us in our market structure analysis. So what happens then? We post a lower low relative to this low. This was a higher low relative to this low. Higher low and higher low because it was higher than that. But once we break the low, this becomes our lower low relative to this one. Hence the market structure shift. Hence a bearish low. And then what happens? The price goes back up. to retest this particular zone, this level. And what happens over here? We post a, actually, this is a lower high. So this is a lower high. And similarly over here, this is a lower high. So we make a lower high relative to what? This high, this previous high. This is higher. This high is lower than this, right? And then what we do? We post another low, which is what? Lower than this low. This is lower than this low. And we also break the structure. So we call it break of structure. And then it repeats. It goes low, it posts another lower high relative to this high, it comes into this zone and does something, and then what happens? We break the structure again. In all of this, the lows in an uptrend, they are only validated once we break the structure to a higher high. Only once we break the previous structure, the, the low is confirmed. And in this case, a high is confirmed once we break the previous low, right? So why does that happen? Because you don't know where the high would be in a downtrend, because price could like do this and just go back up again, and then come back down. So in that case, this would be your swing high. Why? Because this is the highest high before the low was broken again. So this would be your swing high and not this, because this low didn't do shit. This low did not break the structure, or this high did not break the previous low. Actually, it was this high that resulted in the previous low being broken. So this would be your swing high and not this. This is actually from the internal time frames, which we'll go into. But for now, we are just looking at a one singular time frame. So whatever the time frame is, these will be your structures. 4 hour time frame, 4 hour swing high, 4 hour high swing low, 4 hour swing high, 4 hour swing low, 4 hour swing high, 4 hour swing low. Until what? Until we have a 4 hour market structure shift. And then what will happen? We go retrace, and then this will be our lower high, 4 hour lower high, 4 hour swing low, 4 hour swing high, 4 hour swing low. So this is how you actually annotate your highs and lows. These are very, very important because you need to know this. If you can't mark your highs or lows, you will be lost in the jungle of this market. Let me go to the charts and I'll do it with you guys on the 4 hour chart, and hopefully you learn something actually. So let's go to the 2 hour chart and we will start marking our highs and lows. So this is the Bitcoin chart, and I'll I'll do this. In this case, actually go to the 4 hour chart, and let's do it in this fashion. From this to this, right? Let me hide these. Okay, so let's just say that this was our point of origin, or whatever you want to call it. So this is from where we start, and I'll take the path to first, and we start from here. So this is our high, because it's literally the highest point before a pullback. Highest point before a pullback, that's your swing high. And then we start again. So notice that this high did not break it. Which high broke it? This point. and there we have a lower high retracement, right, on the 4 hour, and then we make a higher high, and then we have retracement. All of this, all of these are my swing points, the swing highs and lows. These are my swing highs and lows. And then we make a higher high relative to what? The previous high over here. Now notice what happens. We break the previous low over here. And then we just pull back a little bit from here, and then we go back down again. Then we pull back again a little bit. Actually, it was relatively a lot with this one, but then we make a lower low, breaking below this level. Then we retrace, and then we make a lower low. Then we retrace. We make a lower low, right? Just stick to this point. What you see up here, it's not from the 4 hour structure. It's from the daily time frame. So on the daily, if let's just not go there. I'll go there in when I talk about different multiple time frames. But for now, all you got to do is mark your highs and mark your lows. Just like I did. I gave them a path, and now I'm going to do this. This was a break of structure over here. A break of structure. Because we closed a candle body above it. Then we retraced. Oh, so this would in that case be my swing low. Once we break above the previous high, this one becomes our protected low. This is our protected low. And then we again break structure to the upside again with the body closure. So this is not a break of structure. Once we break above this with a candle close, that is when our structure actually shifts, and that is the break of structure. So this, in this case, it came from this low. All right, it came from this low. This high came from this low. So this will be our swing low. And then we post a higher high. Then we retrace. And we go back up and break structure again. Now, this low that resulted in this high becomes what? It becomes our protected low. If the trend needs to continue, if the trend wants to continue, it needs to hold this protected low. It needs to hold this protected low. If this low gets a candle body closure, we will say that the trend is now likely to shift. It is either going to pull back or it is going to range, but we are going to change the trend now. The trend is coming to a pause or maybe a reversal. But I hope you understand. Body closure below this is what? This is a market structure shift. And then what happens? So we have a new low, we have a high, we have a lower low. We go back up a little bit, we retrace, and then we make a lower low relative to this with a body closure. This is a body closure. So this becomes our validated high, which needs to be protected in case if we want to continue the downtrend. And then what happens? We go back up, we retrace, and then we break the structure again. This is a break of structure to the downside, confirming this as our new protected high. Now, if the price needs to continue downwards, it needs to hold above this high. It needs to hold below this high. This high should not be broken. So what happens then? Break of structure. We retrace until when? Until this point when this candle closes below this level. And now we have a new protected high. And you will also say that, hey, this is also a high. No, this is not a high because this candle did not close below this level. This high was the result. This whole impulse leg down resulted from this high, not this high. Why? Because this is just a structure in between. This is not the 4-hour structure. This is a structure on the lower time frames. On the time frame that we are looking at our swing points, this is meaningless. This whole 2 3 candle, these are meaningless. What only matters is this high that resulted in a break of this low. And we continue again, retracing a little bit, coming back down. And what do? We close below this. And then we see this huge candle up. I think it might be news, it might be not, I don't know, but we also see a sort of a candlestick shift over here. This is called a market structure shift because, as I told you guys, we have the boss, and we have the market structure shift. So this was our low, this was our higher high, this was our lower high, and we created a new low over here, and then we went back up, we closed above this candle, and we gave a market structure shift. Now, ideally, what should have happened is that we should like retrace and then go back higher. But this is the market. It's not like it will do everything like you have learned. It doesn't do that way. There are other things that you guys need to learn, and why this low, this protected low, which now had become a protected low, this didn't hold. Obviously, like there are different things, but you will see this happen often. And honestly, like this was a pretty huge short. I have actually shorted it, and I'm still holding this short. But nonetheless, this is how your structures basically work. So in this lecture, we have learned what is market structure shift, what is break of structure, how the markets move, and you have learned a swing structure, swing highs and swing lows, swing highs and swing lows. You really need to nail this down. You need to learn this. It's very, very important, because if you do not understand market structure right, you will not be able to understand this whole trading in general. So what I suggest you guys to do is, let me delete this all. Go to a chart, pick any time frame that you want. Stick to like 2 to 4 hours or maybe the daily because it's more cleaner. But what you should do is annotate your charts. Mark your lows, mark your highs with breakout structures, and annotate them. By annotate, I mean right above them. What is it? Get rid of this. It's a high. What is this? It's a low. It's a low, it's a high. And once you break structure above, you have what? You have a higher high. I'll just call it HI. This is a higher high. And this would be your higher low. higher high, higher low. Copy this, copy that, and go to the higher highs again. Higher swing highs, right? Just mark the swing highs. What is a swing high again, or what is a swing low again? Swing high is the highest point that you can see which does not have anything to the left, anything to the right. It's literally just space. It's the highest, most obvious point. The highest, most obvious point. Don't look at this because this is just a wick. Look at the bodies, the ones that closed above the bodies. This is the highest point because it does not have a low, it does not have a higher high on the left, on the right. It's the highest point, the highest peak. And similarly to the lows, this is the most obvious low that we can see before a break of structure to the high. And similarly over here again, this is the low that resulted in the high. This is the most obvious low. This is the most obvious low. And similarly, this is the point before a high was broken, a structure was broken. So this point, that is your swing low, a higher low, a swing low. Just call them swing lows, swing highs, because these points don't matter later on. The most recent one is the one that matters, so you can call them higher lows and swing lows. But you first have to annotate them. You have to write on your charts. You have to practice this. That hey, okay, this is higher lows and these are higher highs. So this would be it for this lecture, and I'll see you in the next one with more things.